let's get to it. Scott Crothers and Stifel Nicholas. A lot of people worried about the tariff story causing a little damage on Wall Street. Turned out that it was a good day.
It was a great day yesterday.
Anything of note we should pay attention to?
Sure. Yeah, yesterday the Dow was up 184 points to 26,246. Now Wall Street rebounded as investors shrugged off escalating tariff rhetoric between the United States and China. Treasury yields rose on expectations of more Fed rate hikes, and the dollar traded higher against a basket of currencies while gold prices fell. So, all in all, pretty good day yesterday.
All right. We've got Amazon here. Over in China, they've got Alibaba. What's going on there?
Right. Alibaba Holdings, it's kind of interesting what these companies are getting into. Alibaba Holdings will set up a dedicated chip subsidiary and aims to launch its first self-developed AI inference chip in the second half of 2019 that could be used for autonomous driving, smart cities, and logistics. So they're getting into artificial intelligence.
Yeah, we've been dealing with that for a long time here at the Big 550 KTRS, artificial intelligence. What about Starbucks?
Starbucks unveiled an espresso emporium in the center of Milan. It's massive with 25,000 square feet of mosaic floors. It also opened its first upmarket retail coffee outlet in Italy on September 7th. It is doing this to compete with McDonald's, which has 64% of the specialty coffee market in Italy. So who knew that?
Yeah. All right. And then what about the stock market? We're hearing a lot of rumblings. Too high, not high enough? What do you think? What's going on?
Right. This is kind of, I get a lot of questions like, is the stock too high or is the market too high? And as you know, one of the things we use is P/E ratio to help evaluate whether it's too high, just right, or inexpensive. P/E is the price of a stock divided by earnings, and everyone knows as the stock price goes higher, so can the P/E. However, a lot of investors forget about rising earnings or the company's making more money. So as earnings keep going up, the stock price can keep going up, and P/E can still be reasonable. Like if you look at, for example, a $10 stock with $1 in earnings has a P/E of 10. If the stock price doubles, and so do the earnings, the stock price can be, 20. With $2 of earnings, it still has a P/E of 10, so it's still basically the same price. So even though the stock or the market is going higher, if earnings are growing, high prices can be justified.
What's a good P/E ratio, or is that just variable?
Well, it just depends. It depends on the earnings of the company.
Right.
Like right now, the stock market might be close to about a 20 PA, which might be considered high. But like say if you got a company growing at, say their earnings are growing at 15% and it's trading at a P/E of 10, well, that stock might be inexpensive.
Right. Yeah, I hear
Does that make sense?
Yeah. You and your math guys over there. How do the markets look today? Scott Crothers from Stifel Nicholas.
Well, today the futures look down 7 right now. The U.S. Commerce Department is likely to report that housing starts rose. We also, Linux operating system distributor Red Hat is expected to report higher second quarter profit. And we're supposed to get some information on building permits today. So depending on all those things come out, hopefully it can move the market higher.
Scott Crothers, have yourself a good day. Thanks for the insights. We'll talk to you tomorrow.
Sounds great.